Psychology of a bull market. Seeing pullbacks as opportunities. In a bull market, pullbacks are opportunities for buying. You have to start training your mind to see them this way, even if you're not planning to buy immediately. Here's a practical tip. Whenever the market makes a new high on the daily chart, which typically happens every few days during an uptrend, set an alert below the previous day's low. Add a note to it saying, "Pullbacks are opportunities. Consider buying." This doesn't mean you must buy every time. Only take action when your trading system indicates it's a good move. But if you're going to develop the ability to buy when others are fearful, you need to train yourself to think this way in advance. Otherwise, when the pullback happens, it will feel like a shock or a surprise, and you'll be caught off guard. You've probably heard this a lot. When there's a bull market and then a dip, people say, "Yes, it's a discount, time to buy." But it doesn't mean you should jump in every time the market dips. A 2% drop can often lead to a larger 10% correction. What you should do is start preparing mentally for buying. The goal isn't to buy on the way down without structure. Instead, use a higher time frame like the daily chart to assess the market's overall trend. Once the market shows positive structure and starts pulling back, you then move to a lower time frame to look for a sign of reversal, such as a break in market structure or reclaiming key moving averages on the 1-hour or 4-hour chart. Build and test your system carefully. You can backtest all of this and feel confident about your system, but the real challenge comes when it's happening in real time. Often when a pullback happens live, you hesitate and start telling yourself, "This is going to go lower," or "It's not ready yet." Your brain will always try to come up with reasons not to act. This is important. When you backtest a pullback-based system, it's easy to execute because you're not feeling the live emotions. But in real life, when the market pumps to a new high and then drops by 10% or 15%, fear sets in and buying doesn't feel right. However, that's exactly the time you should be considering buying. Not necessarily buying, but considering it. If you bought every time there was a red candle, you'd obviously not be profitable. What typically happens is the market drops, you feel the fear, and then convince yourself it's going to go lower. When it does, you think, "Glad I didn't buy." But eventually, it bounces back, and by the time it reaches new highs, you're left thinking, "I missed it because I was too focused on waiting for a slightly lower entry." The solution to this hesitation is to have a defined process. It can be as simple as, if your coin is in an uptrend on the daily chart and pulls back into the short moving averages like the 12 or 21 EMA, or if it retraces 50% of the recent rally, I start looking for entries. It doesn't matter what the exact criteria are, as long as you've defined them. For example, after a daily pullback, wait for the 1-hour chart to show bullish divergence on the RSI. That's your signal to consider getting in. Any of these strategies can work. The key is to test them in the past and then use them live. Mark your charts with reminders of what you're supposed to do, so when the market pulls back to your predetermined area, you stay committed to your plan. Don't change your mind just because you see the market pumping and feel the FOMO. If you've identified a pullback area, set your alerts and follow through when the market comes to you. Your job is to execute your trading plan, not to keep second-guessing yourself. Developing a mindset where you see pullbacks in an uptrend as opportunities is crucial. It's not about buying every dip blindly. It's about having a system that defines when and how to take action. In a confirmed uptrend, my goal is to buy when there's a pullback. In a confirmed downtrend, when the market bounces, I'm looking for shorting opportunities. This doesn't mean I'm trading all the time. I'm following a system that gives me an edge. That's how you move from being someone who second-guesses every move to someone who consistently executes their strategy and benefits from the opportunities the market provides.